Hey, good morning, everybody. My name is Cliff Backus, and this is your PushButtonStockTrading.com Daily Video Market Review Weekend Edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Okay, much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. So let's take a quick look at that. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and or sales, and preferably accelerating earnings or sales. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The N in CANSLIM stands for new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term profit. The S in CANSLIM stands for supply and demand and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of their average daily volume on the day that they break out. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. We'll come back to that in a little bit. The I in CANSLIM stands for institutional sponsorship and reminds us that we want to find stocks that the institutional or professional fund managers are accumulating. And finally, the M in the CANSLIM acronym stands for market and reminds us that according to research, 75% of all stocks will follow the market. It's critical for our success that before we begin trading, we understand the current trend in the market. Okay, as we noted, the L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify the market leadership on a daily basis. So let's get started with that. Friday, of the top 100 most powerful stocks in the most powerful industry groups, over a quarter came from the real estate investment trust industry. That's 27 stocks. We had 9 from the integrated utilities industry. Utility networks, we had 7 stocks. And rounding out the top 5, we had medical devices, packaged foods, and basic diversified chemicals, all with 5 stocks each in the most powerful stocks in the most powerful industry groups. We've been seeing quite a bit of packaged foods recently. We've been seeing medical devices for months. We've been seeing a lot of real estate investment trust. And I really like basic and diversified chemicals here. These may be good places to look for leadership in this market going forward. Let's start today by taking a look at the Russell 2000. On Friday, we noted this short-term trend line, and we noted that the Russell had pulled back to that area and held support. On Friday, we broke below that support level, and it looks to me as if the next area of support for the Russells going to be down here in the 1156 range. That's a fairly minor support area, and it wouldn't surprise me if we undercut that level. The next significant area is going to be down here in the 1140 range. Meanwhile, resistance is going to be up here in the 1205 range. I think the Russell's the key to the market going forward. We'll see if we can hold minor support. If we can't hold that minor support area, which it wouldn't surprise me to undercut, we'll see if we can hold more significant support down in the 1140 range. See what the NASDAQ Composite's up to. But before we do that, stocks took a beating on Friday on heavier trading volumes. Stocks sold off broadly and hard. Both the S&P and the NASDAQ seem to have blocked at significant resistance areas and may need to consolidate recent gains before making another run at resistance. Trading volume was heavier than Thursday, and both the NASDAQ and the S&P both gave us their first distribution days in over 2 weeks. Distributions defined as a trading session when either the NASDAQ or the S&P trade at least 0.2% lower on heavier trading volume than the prior day. Distribution is an indication of selling by the professional money managers that move the markets. Too much distribution in a short period of time can indicate that an uptrend is under pressure. That noted, Friday was just the first distribution day in over 2 weeks, and today the NASDAQ lost 2 distribution days due to age. The S&P 500 won. The older distribution gets, the less relevant. We no longer count distribution when it becomes a month old. According to our count, the NASDAQ currently has only 2 distribution days, and the S&P 500 has 3. Investors.com has a higher count, as they don't purge distribution until it's 5 weeks old, and they count stalling days. Stalling is a form of distribution that requires that the index close higher, but at the bottom of its daily trading range on heavier trading volume. Unless it's egregious, we don't track stalling days. All that noted, Investors.com's market outlook is indicating a confirmed uptrend in the market. Our market timing model is giving us a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Friday, declining issues swamped advancers by better than 4-1. New highs continued to outpace new lows. According to our Ramosi ratio, small capitalization stocks bettered large and continue to outperform on a 10-day moving average basis. The bulls prefer to see small caps outperform. Our Ramosi swing timing model is indicating a neutral condition in the market. We were extremely overbought on Friday. The short-term McClellan oscillator Friday became the first of the indicators that we follow to turn bearish, although the longer-term summation index remains solidly bullish. From a market perspective, both the S&P and the NASDAQ appear to have paused at significant resistance. While our distribution count isn't a concern, if the S&P and the NASDAQ are turned away at these levels and we begin to consolidate recent gains, expect the distribution to come into the market. Our market timing model is now on a buy signal. The market looks as if it needs to consolidate gains here. Traders should be as fully invested as they're going to get. As always, keep your stops current and in place. Okay, on Friday, the NASDAQ dropped 64.07 points, or 1.29%. We closed at 48.94, and notice how we undercut this support level in the 4900 area. NASDAQ's been struggling with that support resistance area for a while. Also note how we were turned away again at this long-term trend line. This trend line goes all the way back to the beginning of the bull market in 2009 and has proven an area of significant resistance for the NASDAQ in the past 6 months or so. Next area of support for the NASDAQ is going to be down here at the 50-day moving average, which we show in red. If we break below that, we have support all the way down here in the 46.78 area. Trading volume on Friday was heavier than the prior day, giving us a distribution day. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since February, and we have only 2 distribution days. Having lost these 2 distribution days from April 11th and 12th, 2 distribution days and only 1 distribution day in the past 3 weeks is fairly insignificant distribution. That noted, this day was ugly. I think that the market needs to consolidate gains here, and it wouldn't surprise me to see the market pull back into this area in the 46.78 range before coming back and breaking resistance up here in the 49.69 area. Let's see what the S&P 500 is up to. S&P Friday was down 19.41 points, or 0.92%. We closed at 2096. Again, we seem to have been turned away at psychological resistance in the 2100 area. Notice how we came up against resistance up here in the 2116 range, and we appear to have failed. Trading volume on Friday was heavier than the prior day, giving us a distribution day. The S&P 500 is currently on a confirmed uptrend in the market and has been since February. We lost a distribution day, this May 11th distribution day, but we picked up a distribution day, and so the S&P's distribution count holds at 3 days in the past month. That's not a lot of distribution. We'll look for the S&P to find support at its 50-day moving average. If we fail at that level, next significant area of support is down here in the 2044 range. We still have resistance up here in the 2116 area. Our market timing model on the S&P remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Let's put together a little bit of a watch list for the week, but before we do that, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted. First stock I want to take a look at, Masco Corp, manufactures cabinets, plumbing, and other products for the home improvement and new construction markets. Stock's been working on this first stage base-on-base formation with a pivot point up here in the 3292 area. Gets a 64% checklist rating and may be of interest to both conservative and aggressive traders. This is a nice flat base here, and a break above 3292 on at least 140% of average trading volume may be a good place to buy the stock. We've been looking at HD Supply Holdings. HD distributes products for the maintenance and repair infrastructure and power and specialty construction markets. We've been watching this stock for a while. It appeared to be putting in this flat base right here with a pivot point in the 3951 area. A flat base requires a 5-week basing period. We never actually put in that 5-week basing period, and so this flat base becomes a non-issue. But what we could say is that HDS has formed a cup and handle and tried to break above that in the 35.51 area and failed last week. Finally, we have this consolidation base, and the consolidation base has a pivot point up here in the 36.81 area. We've been saying that's the more conservative entry. We continue to watch that 36.81 pivot point. HD Supply gets a 72% checklist rating and may be of interest to both conservative and aggressive traders here. Again, we want to break above that 36.81 area on at least 140% of average daily volume. We'll keep an eye on it. Next we have Hasbro. Hasbro Inc. manufactures traditional and high-tech toys, games, and interactive products sold worldwide. The stock is working on a first stage base on base formation. We have this nice consolidation base. We broke out of that area and immediately went into another first stage base. This is a nice flat base. Hasbro gets a 68% checklist rating. We have a pivot point up here in the 88.53 area. And Hasbro, if we were to break above 88.53 on at least 140% of average daily volume, may be of interest to both conservative and aggressive traders. Acuity Brands is a holding company engaged in the production of lighting products for industrial, commercial, and residential markets. The stock has been working on this second stage base on base formation. Again, another nice tight flat base with a pivot point up here in the 280.83 area. Acuity gets a 72% checklist rating. We tried to break out of this trading range last week, or maybe the week before, and failed. But I still like this space. I still would consider this space to be valid. And a move above the 280.83 area on at least 140% of average daily volume may be of interest to aggressive traders. More conservative traders might want to stay away from this one. It has an average daily volume of only 600,000 shares, and that's a fairly thinly traded stock. It could see some volatility. And the last stock I want to take a look at is Mobileye NV. Mobileye is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. The stock is working on this first stage base. The stock had put in a high at $64 and has sold off from that area. We're trading at $36.36, and this may be of interest to people who like to buy stocks on the cheap. Mobileye gets a 68% checklist rating. We put in this low back here in February. We've had this 30% up move, which is necessary before we can put in a first stage base. We have a pivot point up here in the 41.37 area. A move above that 41.37 area on at least 140% of average daily volume would be a good buy point for anybody who likes to buy stocks on low bases. Mobileye is probably going to be of interest to more aggressive traders. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.